They promised a new world, a world without queues, hidden fees, or bank managers in suits. Just you, your phone, and total control of your money. That was the dream digital bank sold us. Fast, easy, borderless finance. And for millions of people, it worked, until it didn't. Because recently, one of the most trusted names in Fintech, Revolut, was fined 3.5 million euros. And behind that fine lies a story that exposes a dark truth about digital banking, one that regulators have been whispering about for years. This isn't just a story about Revolut, it's a warning about the entire future of money. Revolut started as a rebel. In 2015, it burst onto the scene with a bold mission: to fix banking. It promised the end of slow transfers, unfair exchange rates, and bloated bureaucracy. It was banking for the digital generation, an app so sleek it made traditional banks look ancient. The numbers told the story: tens of millions of users, billions in transactions, a valuation soaring past $30 billion. People loved it. They trusted it. It became a status symbol to flash that minimalist metal card. But while customers were busy tapping, spending, and sharing referral codes, something else was happening quietly behind the screens. Revolut systems, built for speed and convenience, were struggling to keep up with something far less glamorous: compliance. Because when you deal with money, speed isn't everything. Trust is. And in banking, trust isn't just about user experience. It's about following the rules that keep crime out of the system. That's where Revolut stumbled. Between 2019 and 2022, Revolut's compliance systems failed to properly verify customer identities. In simple terms, it didn't always know who its users really were. And when a financial institution doesn't know that, it opens the door to a nightmare: money laundering, fraud, and even terrorist financing. When Ireland's central bank investigated, they discovered Revolut had serious flaws in its anti-money laundering checks. Some accounts slipped through without the right documentation. Others weren't monitored properly for suspicious activity. It wasn't that Revolut didn't know there were problems, it's that they didn't fix them fast enough. And that's where the fine came in: 3.5 million euros. Not for stealing money, not for a hack, but for something arguably worse: a failure to protect the system itself. Now you might think 3.5 million euros, big deal. For a company worth billions, that's pocket change. But that's missing the point. The fine is symbolic. It tells the world that even the smartest fintechs can't run faster than regulation forever. Because the fintech dream has always been built on a contradiction. These companies want to move fast, break things, and disrupt traditional banking. But banking isn't like social media or ride-sharing. When you move money, you move power. And power without accountability always attracts trouble. This isn't the first time a digital bank has been caught in this storm. Germany's N26, the UK's Monzo, and others have all faced their own compliance struggles. Their technology is impressive, their branding irresistible, but regulators keep finding the same cracks. Why? Because these companies were designed to scale first and ask questions later. They optimized for user growth, not risk control. And when millions of new accounts flood in overnight, the systems meant to verify identities, track transactions, and flag suspicious behavior can buckle under pressure. Traditional banks have spent decades building entire departments to handle compliance. Digital banks built apps. And apps, no matter how sleek, can't replace human oversight when billions of dollars are flowing through the system. The Revolut fine is a reminder that innovation without caution isn't progress. It's danger in disguise. But here's where it gets even more interesting. Revolut didn't deny the findings. They accepted the penalty and said they'd already fixed the issues. They hired more compliance staff, upgraded their systems, and assured customers their money was safe. And to be fair, it probably is. Revolut is not collapsing. It's still growing, expanding, and preparing for a banking license in more countries. But what this fine exposes is something bigger than one company. It's about the fragility of trust in the digital age. Think about it. Every time you open a financial app and tap Agree, you're trusting that the company behind it is secure, ethical, and compliant. But how often do we actually know what goes on behind the glossy interface? We see instant transfers, crypto trading, and cashback offers. What we don't see are the compliance teams, the regulators, and the layers of security, or lack thereof, that keep everything in check. The truth is, digital banks are only as strong as their weakest algorithm. And as more money goes digital, the risks grow exponentially. Revolut's 3.5 million euro fine isn't just a legal headline. It's a flashing warning sign that even the most innovative systems can fail where it matters most. Because innovation without integrity is a ticking time bomb. And it's not just about banks. The same principles apply to every corner of fintech: crypto exchanges, peer-to-peer platforms, payment gateways. All of them rely on a promise that your money and data are safe. But as we've seen time and time again, promises are only as good as the people who keep them. So what does this mean for you, the everyday user? It doesn't mean you should delete your apps or stuff your cash under a mattress, but it does mean you should start paying attention. Look beyond the marketing. Read the fine print. Ask how your digital bank handles verification, fraud detection, and data protection, because flashy branding doesn't equal safety. Revolut's story is a lesson in balance. You can innovate, but you must also be accountable. You can grow fast, but not faster than you can manage risk. Because in finance, one mistake can cost not just money, but trust. And once trust is gone, it doesn't come back easily. The irony is that Revolut, like many fintechs, was built on the promise of transparency. It gave users a window into their spending, savings, and investments like never before. Yet behind that transparency, the company itself was hiding a weakness it couldn't afford to ignore. And now, exposed by regulators and fined for its oversight, Revolut is facing the one thing no app can code away: accountability. The digital revolution in finance is still unfolding. We're just at the beginning. But this story proves that even in a world run by algorithms and automation, the oldest rule still applies. Trust takes years to build and seconds to lose. So the next time a fintech startup promises to revolutionize your money, remember Revolut's €3.5 million mistake. Remember that behind every tap and transaction, there's a system of rules designed to protect you. And when companies cut corners on those rules, it's not innovation, it's negligence. Digital banking isn't doomed, it's the future. But it's a future that needs to be built on more than code and convenience. It needs to be built on responsibility. Because as Revolut just learned, the real cost of getting it wrong isn't just a fine, it's losing the very thing that made people believe in you in the first place. Money moves fast, but trust moves faster, out the door. And once it's gone, no amount of sleek design or viral marketing can buy it back.